Hi, it's David from beststockstrategy.com, and I want to provide a summary for how we're up 300 or over $375,000 on a year-to-date basis. Currently, it's July 20th. So we've had a good year so far. Actually, probably one of our best years ever. And the way that we do things is we sell puts. Now, obviously, we sell some calls as well, but for the majority of our positions, we sell puts, and we sell very high probability trades. So our strategy is we'll only trade market leaders like Facebook or Amazon or Lockheed Martin, and that way we're avoiding penny stocks and stocks without a substantial depth or liquidity in their trades. So if we need to roll the option, or if we need to get out of the position, it's very easy to do so. And additionally, unlike penny stocks or stocks without a substantial trading volume, there's very low slippage, meaning that the bid and the ask are relatively narrow. So the price that you see is the price you get, and you're not going to pay 50 cents above bid in order to fill the trade. So what we do is, to give you an example, Facebook right now is trading at about $165. We'll wait for Facebook to fall to below 160, and then we'll sell a put option on Facebook at slightly below 150. That way, we will collect the premium, and in the worst case scenario, we really wouldn't mind owning Facebook at 148 or 149. And if you compare this strategy against what a lot of people do, which they essentially try to time the market and buy at the low and sell at the high, although unfortunately a lot of psychological things come into play, where once they buy, they have problems knowing when to sell, or they hold on to it for way too long, or they don't hold on to it for long enough. But getting back to what I was saying before, we wouldn't mind owning Facebook at 148. And the reason why this is substantially advantageous, or more advantageous than actually owning the stock, is when people buy and they sell, they would pretty much wait for Facebook to drop a little bit, like $2. So if it's at 165 now, they buy it at 163, and then they just hold it. And they wouldn't know when to sell it. And maybe if Facebook corrects and it goes down to 120, then they'll hold it all the way down as well. So if you look at the difference between entry points, if you're buying and selling stock, you're going to own the same security, Facebook. And this person who's just buying and selling stock is going to buy it at 163. For me, even in the worst case scenario, I'm going to own Facebook at about 148 or 149. But a much more probabilistic outcome is that the put that I sell at 148 is never going to be exercised. And therefore, I'm going to collect the premium and just be able to redeploy that capital once that option expires. So one of the reasons why we sell puts, and one of the reasons why we're up $375,000 this year, is because we haven't had any trades put to us this entire year. So the only way that we make money is by hitting singles and collecting that option premium. We don't in any way buy and sell or trade stocks. Instead, we are insurance salesmen. We will sell you a policy, collect that premium, then wait for that premium, or rather wait for that policy to expire, or we'll buy back that policy once there's not much premium left on that option, and then we'll simply redeploy it to a new opportunity. I usually spend about 20 to 40 minutes a day looking at the stock market. I make all of the trades from my phone. So what I do is I have about 20 stocks on my watch list, and then I'll look for things that have had a 1 or 2 or 3 day fall, and I'll look for market leaders, and I'll only trade stocks that are on my stock list, and then I'll sell a put on it. The stocks that I usually sell puts on and that I'll always have positions on include Facebook, Lockheed Martin. I like the NDX index. I also like selling calls on UVXY because there's substantial fees and backwardation that go into that ETF and a lot of drag. So even if volatility pops and UVXY increases, it's usually just, I think UVXY had a reverse split earlier this week. UVXY, if you look at a chart, it's pretty much straight down. But our strategy is very simple. It's not something that requires a guru to teach you. We don't claim that we have a black box method, or you don't have to look at these charts and have 4 or 5 monitors and guess whether one is a head and shoulder pattern, or this is resistance, or this is support. The fact is that our trades expire worthless about 90 to 95% of the time. And if they don't, we just roll the option and reduce basis. I can easily teach you how to trade stock options. And it should take you about 4 to 6 weeks to learn. And you'll learn a skill for life. And additionally, I would highly encourage you to open up a paper trading account or a practice account, and you can learn the skill. So feel free to contact me, and we'll get started.